very much.
I guess the question is, have we hit bottom? Has the worst been behind us now?
Well, the problem is that we don't know. We still see whether policy making in Europe and in the US comes to the rescue of their economies over there. The crisis in Europe does not appear to be over, and markets will continue to be affected by that.
Well, we did hear from the U.S. Treasury Secretary as well as, Tim Geithner. He's sounding pretty upbeat. He says there's no way, absolutely no way, that there will be another Lehman-type collapse for financial firms, in the U.S. at least.
Yeah, that's true, and we hope so. But he also said that Europe has been moving too slowly on the crisis. So I think that the U.S. is trying to pass the ball to the Europeans.
Point fingers, do you think?
Yeah, well, a little bit of burden shifting, yes.
Okay, so what about here in the Asia Pac? I mean, does it go as, say, Europe and the U.S. goes? And what's the baseline case for HSBC right now?
No, absolutely not. I mean, Asia continues to have a lot of inertial growth, a lot of strong consumers, a lot of re-leveraging of households. It's not the same issues that the US and Europe are facing at all. In fact, we still believe actually that China and India will continue to be growing as if nothing is happening around.
Really? But you're not seeing it in the stock markets. The stock markets are losing.
Well, that's a whole different story. Yeah. The markets are anticipating a very, very dramatic scenario, but yet not like 2008. Actually, you will have even more than 20 or 30% more to go if we were to repeat what happened back then.
Right, okay, but the economies will continue to grow. So maybe those that are predicting China will see its growth dissipate to 5% in just about 5 years' time. Are they wrong then?
Well, it's hard to know, but we still think that there's a lot of good things going on in China. I mean, basically the economy is much closer than it was in 2008, much less affected for what's happening in the rest of the world. Exports is not explaining so much growth like in the past. China is becoming a market in its own.
Right. But economic growth is sometimes very divergent from what happens on the stock markets. Right now we might have growth in the economy, but I mean, take a look at the stock markets. People are running scared. How long do you think the selling will last?
Well, that's a good question. People are running scared on two things. First, they have in the back of their minds this idea that it could be a repetition of 2008. Valuations have not gotten as cheap as they got in 2008, so we're not seeing yet some sort of bottom fishers out there. And the question is that outflows from emerging market dedicated funds keep on happening. Just data released yesterday in New York is suggesting that another $3 billion left equity dedicated emerging market funds, another $1 billion left fixed income dedicated emerging market funds. As long as portfolio managers have this fear that clients might be taking their money out, they're not very likely to put too much money to work and take too much risk.
Okay, well, we got Samsung results today beating estimates. What do you think about corporate earnings, and how is that going to play into year's end anyways?
Well, that's actually a good point, because corporate earnings are looking okay, and so PEs in some of the stock markets are not as bad as the valuations are just suggesting, and that is giving us some maybe hope that some rebound could take place. But the slowdown in the economic activity is just happening right now, so we need to see also whether these earnings for the future are going to be revised down.
Yeah, that seems to be the word of the day, isn't it? Hope. Okay, tell me this. Where's the best bet in the emerging market space?
Well, it's actually right now staying a little bit on the sidelines, and there are some pockets of good value that are opening up. Bonds in hard currency are becoming very cheap compared to 10-year treasuries, for example. Some Asian currencies have sold off quite a bit. Equities also sold off a lot, even more than developed market equities, but we need to see some policy action out of Europe to put investors' fears into rest that this will be a repetition of 2008. All right.